going on, guys? Back with another daily review. Always with the executions, never fail. Um, Today is Thursday, September 14th, 2023. And yeah, let's just get straight into it. So, daily time frame. We traded the whole way down to this discount for Vega Gap low. So, this black line here, this gap right here, the low of that, you see that? Along with this down close candle, this is an order block. We dug into that in a discount. So taking our entire daily range, you see we're in a discount. We created this swing low right here on those discount arrays, traded up. And then yesterday, Wednesday, was CPI. We manipulated lower, created the low of the week, which I believe is the low of the week. We still have one more trading day, but I believe this is where we made the low of the week. And we have a failure swing right at midpoint of this daily wick, aka a gap. So you see the precision around that wick there. Above this swing high, there was buy stops. This would be the Monday high. There's buy stops resting above there for those chasing to move lower. If you guys were looking at my pre-market analysis, my private members, you guys knew I wasn't looking for lower prices. I was looking for higher prices. So we were looking for these premium buy stops. And if you can see here, this small little daily for Vega Gap, and it just so happens that's where we stopped in our tracks and are about to close on the day, or did close on the day, sorry. So with all this being said, let's go ahead and drop down to the hourly time frame. And right away you can see right at this discount, these two discount levels on the daily time frame, we created a long-term low. So this swing low here from yesterday, the Wednesday low of the week, this swing low here, and then this swing low right here. Now, London, we create another intermittent term low after that long-term low, below opening price. So you take a look at the power of 3 here. It wasn't pretty intraday, but you can see the very strong power of 3 here. Whoops. So boom, we come down, make this intermittent term low here, this swing low right here, swing low to the left of it, swing low to the right of it, and we traded down into this balanced price range and wicked off of it. Okay, so I'm going to change the color on that. Actually, I'm going to leave it. If we flip down to NASDAQ, you can see that this London low was taken out, but we failed to do so on ES. You can see the SMT divergence there. So with that being said, let's drop lower. Didn't really need the 15-minute time frame, honestly. Alright, so boom. Let's go ahead and mark out that 9:30 opening here. And if you look here, not only do we have, let me extend this back. Not only do we have power of 3 at midnight, but we also had it at the 9:30 opening here. So as soon as we slam lower here into the rejection block, and what is the rejection block? It's simply just when price comes down and cleans out all the bodies. Cleans out all the bodies here and leaves the wicks intact. So the rejection block is where all the bodies are. That's where the bulk of the volume is in the liquidity. So I'm going to take that off. And it returned back below the midnight opening. And if you take our London low to the high we made intraday, you can see how the Judah swing went down into a discount rejection block. And with that being said, as soon as I saw this 5-minute down close candle form right here, and we aggressively shifted above that around that 10:30 hour, that to me was a high probability change in the state of delivery. And then I was going to be looking for buy side up here in this daily premium array right here. So I got this order block, 5-minute order block shaded. You can see how we opened on the next candle, wicked down to it, and traded off of it. So let's actually just drop right down to the 1-minute time frame. And now you can see on the 5-minute, this 5-minute order block is all these candles now here, and we get above it, trade down into it, along with this 1-minute inefficiency, which is where I went long in my execution video, as you guys saw. So right here. So boom, we have our SMT divergence, we have our discount, we're back below opening price, we have our change in the state of delivery, and a market structure shift. So as soon as I see all of that, that's when I'm going long. Right here, went 2 contracts long. And then we traded higher, obviously, and then I pyramided. Remember what I said? Go back to yesterday's video. Remember what I said? Whenever those 1-minute order blocks are formed in premiums, that's where I go long on those. And I'm not expecting it to return down to the inefficiency. So this order block right here, as soon as that was formed, that's where I went. That's where I pyramided. This order block right here. And it was placed, as you can see, right around equilibrium. And as soon as it changes the state of delivery right there in the 1-minute time frame, comes back down, boom, add 1 more contract, and we're still below opening price. So, so for targeting purposes, this was the daily fair value gap I mentioned, and then this would be previous hours high. Why is previous hours high important? The algorithms. Intraday, the main thing they target intraday is previous hour highs and previous hour lows. Very important what I just said. So, this is everything I used for my trade here. And one more thing I should probably note, I was using this inversion gap along with this order block here for my pyramid entry. So, there's the business on that. I'm actually going to flip to NASDAQ just real quick. And you can see we made that lower low here, took out these relative equal lows, shifted market structure, the 5-minute order block. You can study that on your own. As soon as it dipped down to this inefficiency right here, boom, I'm long. Right there. And a little bit more prominent buy stops up here. Looks a little cleaner with the previous hour's high. So these relative equal highs right here. Retail saw this drop down, and they're all trying to hop in short. And informed traders like myself, we saw this as a target, not continuation. NASDAQ though, see, we took the London low, and I called this real time in the Discord for my tier 2 members, right to the tick, very precise here. Traded right down to the midpoint of this discount wick here. So take your fib, take that hourly high to low, boom, and then flipping down to the lower time frame, you can see discount order block form, change in the state of delivery, shifts right above this 5-minute order block here, this down close candle, boom, opens here, trades down to the order block. That right there is a high frequency algorithmic buy. And then within this is the 5-minute order block here. I'm not going to go back, but the buy here was clearly in a discount and then targeting premium buy stop. So I'm not going to keep dragging it along here because this is all I use for my trades today. As you guys know, you don't need to overcomplicate it. Keep it simple. Yeah, so I think that's going to be it for today. And yeah, even though it looked very sloppy yesterday, it was a very precise day, I would say. So I'll see you guys tomorrow on a live stream, and hope you have a good rest of your day.